Hey, welcome to the closing beat, everybody. Happy Tuesday to you. How's it going out there? Hope you're having a good day. Thanks for watching here. We are financial advisors with Jazz Wealth. While other advisors are playing checkers, we are playing chess. And this is a cool one. I was working on this with a client. Every day I like to share this with you. Would you retire earlier, take Social Security earlier, pay more tax, but end up having more money? That was tricky because they were like, I don't want to pay more tax. I'm like, look, I mean, I know it may you pay more tax, but you end up with more dollars this way. So it was really kind of a cool thing. Anyways, we like working with those kind of things here at Jazz Wealth. Be sure to check us out, jazzwealth.com. Wine and Wealth, by the way. Eric did the 529 discussion there, the strategy behind it, not just the rules with the 529 and the Roth. Last week I did some new tax rules coming your way. We like to cover everything, and things are rapidly changing, right? Because, politicians. So we'll see how that goes. Speaking of politicians, we have, we're playing a little game here in the office. Who's going to be the VP pick? And here's what we've gone with. This is everybody. Eric, unknown white female. Haley, non-binary Z-Zer. She's really going for it there. Doug's going white female politician. Kevin says older white male, and he, I think, probably has the best odds, like historically. I'm going with unknown non-white politician, or female. Cody's going Tulsi Gabbard, and Mama Jazz is going non-politician woman, and Chris down at the bottom, can't see his picture for the moment, that's okay, I'd be surprised, is going young non-white male politician. So there you go. We'll see what happens there. We're just having a little bit of fun, before we see the world of politics go crazy. We're going to talk about that here in just a second. But for the moment, let's take a look at the stock market, see how things are going. So, all right, the S&P, is it up? Yeah, okay. So the S&P here, not much getting going today. You notice that? Why couldn't the market get anything real good going? If you look at the intraday of the S&P, just back and forth there, well, you got, I know it's out now, but you had Microsoft and Alphabet reporting earnings there. You got the Fed coming up tomorrow. The market's in a wait-and-see moment because it can be. You ever notice that? When the market's had a good run leading up to a potential catalyst, the stock market sits. And that's okay. There's nothing wrong. I'm not going to pick on that. I mean, it's fine. You got to have those days. But it just sits. Because why? There's no pressure. I don't need to sell. I've got a healthy profit. I don't need to buy right now. I'm kind of hoping it goes down, right? I'll wait for the catalyst. So you get that wait and see. You get a lower volume day. If I can pounce over here, see the volume on that, right? Lower volume day, less participation overall, and that is okay. Now, as far as the Fed meeting goes tomorrow, since this will be out before we talk again, what you're going to expect is you're going to expect to see them keep the language where a rate cut in March is a probability. But we're not going to guarantee it. They're going to thread that needle. I don't know what words they use. I don't know who writes this language in there, but watch how perfect they do this, that they'll get everybody going, yeah, well, March rate cut, could be. We're not going to commit to it, but it could be. That's what you're going to get out of this. I think it's going to be a whole lot of nothing. Remember, February rate cuts tomorrow is just not on the table, not going to happen. So anyways, let's go to markets here. One thing I noticed earlier today, the banks on fire all day. I looked at our portfolios, of course. I look at them all the time because I love doing that. And I noticed that your U.S. large banks, your U.S. regional banks, and then your international banks as well. A lot of the banks, and that's largely due to earnings that some of them had there, a Brazilian bank. And so all day, banks led the way. That was your number one performing sector all day without question. Also interesting, energy popped back up a little bit. right? Remember, energy was the laggard yesterday. Today, it's the leader, and in a big way. If you take a look at oil, nice strong move, 1.3%, pretty good for that one. The uptrend, well, the hopes of this being an uptrend continue for the moment. If we go on over to the NASDAQ was within, now it's lower now quite a bit because of the earnings that came out. Let's do it this way, actually. We'll go like this. There you go. So here's where the NASDAQ was, right? The futures market after hours is down quite a bit, Microsoft and Alphabet. I'll talk about that in a second, but the NASDAQ was within 3% of hitting a new high. So we're going to have to wait just a little bit longer there, apparently, after the earnings have come out and see what happens. The point I want to share with you is, look what happened when tech and semiconductors, had just a little bit of a down day. I'm not talking about after hours now. I know things have changed, but look what happened when they had just a little bit of a bad day. Those big dominant stocks took just like a tiny bit of a day off. They were a little tired and the market stuck. It couldn't get anything done. What happens when those have a really bad day? And what is about to happen, right? I mean, this is what's going on in the world here between mainly Alphabet, but Microsoft and Alphabet. What happens? Look at the futures market. Sorry, you can't see it. We're already down. We're down 1.3% after hours here because those stocks just had a little bit of a bad day. I mean, that's crazy. Now, I say in the title of the show here that the stock market is about to get rocked, not because I somehow magically could guess the earnings of Microsoft and Alphabet and et cetera, but because that's $5 trillion of market cap, right? So you have, just with those two stocks, you have $5 trillion reporting. Remember that the S&P is a market cap weighted index. The bigger the company is, the more weight it has. In fact, those two stocks, if you account for both classes of shares, that's 11% of the S&P with just two stocks, two companies. And so, of course, let's take a look. We'll come back to it, I guess, but of course, if you look at Alphabet, oh man, it's going to have a bad day. Oh no, that's crazy, right? No, it's 11%. So of course that's going to drag down the NASDAQ there. You got to be very careful when you get overcommitted to the heaviest names. Chasing those biggest names, you're going to be on a Bronco, right? Just hold on for the ride. I'm sure you'll be fine, but it's going to be a wild ride. You got gold moving a little bit higher here as well. That's pretty cool. And then bonds. I'm going to stop on bonds here for uno momento. So not new news here, but the Treasury is going to borrow $760 billion in the first quarter. They do that by selling bonds, both short-term and long-term bonds. Previously, I looked this up, they were expected to borrow $50 billion more, right? So over $810 billion. So it's good news for bond prices that the government is going to borrow less. Because what does that do? So it's just like anything else, right? It's just like a stock, right? If there's going to be a lot of selling, that holds back the price, right? There's pressure on price. The same works for bonds. Just don't think yields, think of the price. So we're going into tomorrow where the Treasury is going to start selling short-term and long-term bonds. Well, no, tomorrow we'll find out which they're going to sell and how they're going to do it. But when you have selling pressure, you've got obviously a tough game to go higher. It's very difficult. So the bond market's actually going up now because, hey, there's going to be less selling. The pressure is going to be less. So it's kind of cool there. And tomorrow they're going to say how they are going to spread the sales, meaning are they going to do 80% short-term bonds, 20% long-term? What's the spread there? And you'll really start to see the volatility in that segment of the bond market at those maturity dates, right? So pretty cool there. Not something we normally talk about. Let's see if that works. Nope, didn't work. Okay, moving on there. What else do we have here? Okay, before I get into stocks in the news, right? We're going to try something just a little bit different here. I tell you things ahead of time so that when they happen, you're not emotional. You've already figured out what the offensive play is, what the defensive play is. If I tell you as things happen, when there's chaos, you're no longer paying attention. I do that with clients as well. We always talk about what could happen while we're moving instead of waiting for something to happen and then going, oh no, let me tell you what to do. So remember, as the election season heats up here, the stock market's performance is just about average in an election year. So when you think it's doom and gloom because your side's not winning or whatever, remember that the stock market performs just about average. In an election year, the stock market averages a 6.8% gain. That's an average. But in any other year, the average gain is just about 1% higher. So it's essentially average there. And I got a few fun stats here for you. The performance intra-year, like during the election year, it tends to be, I didn't get a chance to put a graph together, but tends to be flat in the first quarter. We got a little bit of that going on there. And then a rally into the summer, right? Massive volatility around the actual election days, and then Santa Claus rally. So if you want to break it down into chunks, that's what you tend to see. Now, I thought that was pretty cool. Let's take it a step further. So in an election year, here's one way to look at this, because they're always going to say Republicans are worse than Democrats in the performance and all that. Let's try something here. Since the inception of the S&P, Democrats' first year, that if they win, not counting whether they win the incumbent or not, just a Democrat win for office, the White House, the average performance is 12%. Republicans is 2.8%. And so they always have that argument, like Democrats do better for the stock market. Well, that is technically true there. But look at the performance in the years leading up to it. Just like a stock, did we have a massive rally and then a Republican takes over and so the juice was kind of out of the market there? That's what tends to happen. In years where Republicans won, the average market rally prior to the election was 9%. In years where Democrats won, the average market rally leading up to it was only 3%. All right, so that explains a little bit of it there. I don't mention this to divide or get you to go, oh, that's what, you know, one side sucks, the other side doesn't. I mention it to get your mind right. Because either way, all those numbers that I just rattled off represent volatility. And you know there's going to be volatility. There's going to be something they talk about, healthcare. Someone's going to say something that's insulting to the other. Someone's going to have one of those gaffes. You know, everybody's got a gaffe. So get your mind right. It's going to get worse, right? But if I tell you now that the market tends to just be average, we can kind of weather through some of that storm. I hope. I can only do so much, but we'll see what happens. And expect more on that to come. We will definitely be covering more of that. All right, let's take a look at some of the stocks in the news here. So you got HCA. We happen to own it, so I took a look at this one here today. Basically, it's an earnings play, but the juice came from a $6 billion buyback. In fact, a lot of the stocks today that did buybacks, a lot of the juice came from the fact it was a buyback. Earnings were fine, they beat and all that stuff, but the excitement came from that. Also, if you want to use our research site, HCA doesn't often, maybe twice a year, I think I found, that it has a 5% gain in one day. All right, so we gained just over 5% today. The next day is a 50-50 shot. Is it going to go up or down tomorrow? Literally, it's a 50-50 shot using about 58 different scenarios to come up with that. As you look into the 3-month, 6-month, and 1-year period, you have 80+% chance of it going higher and a really healthy gain. So in other words, when HCA gains more than 5% in one day, it tends to be a good sign going forward. So if you own it, of course, you're happy to see that, and I'm happy for you. Northrop Grumman actually reported here. No, they did reported the other day, not too bad. Today they said, oh, we forgot to tell you, we're going to do a $1 billion share buyback. That's not really a whole lot, but it certainly helped the stock here today recover from some of the, let's just call it chaos. Pulte Homes beats on earnings there. They're doing a $1.5 billion buyback there. I found what was interesting. I went through and looked at this because we happen to own the stock. Very happy with the performance there. They actually said that lower rates helped demand. It was like that much change in the rates, right? Awesome. The fact that there's a little dip in rates and that spurred that demand right there. Remember we talked about new home buying versus existing home buying yesterday, how it's actually cheaper to buy a new home at this point if you live in an area where you could do that. They also said we expect our inventory to remain really low through 2024. That's a great sign, right? I'm not complaining. I'm very happy to be a part of that. So we'll see how that goes. All right. The other one I want to point out, because this is kind of like an economic barometer. You know how we'll say Walmart is a retail barometer, like does the person have money to spend? What are they spending on? Walmart's really good about reporting that. UPS now, this is 3 quarters in a row where the average revenue per package has gone down. And, excuse me, and part of that is because the average daily package delivery has gone down as well. They actually missed on every expectation there. Just means they're delivering less packages. Well, they're one of the biggest deliveries there. So there's one of two things that could happen. It's either one, the business has gone a little bit towards Amazon. Well, we'll find out. Or it could be two, that there's less packages being shipped and we're slowing down just a little bit. I think there's kind of a combination of both. We could look inside of Amazon to see if they're in fact stealing some business. It's not FedEx. That's obvious. But it could be that Amazon is taking a little more market share. I won't run to the same comments that the analysts had where they were saying, that's it, the economy's slowing down, we're going to have to start cutting rates, yada, yada. Okay, I understand that argument, but remember, Amazon stealing business there and has been stealing business. Hey, if you want to learn more about the basics of investing, goal setting, financial planning, all of that, or you have kids that want to do that, check out Haley's channel. Maybe Cody can put it into the room there. It is DOHSTR8 on YouTube there. She's doing some great videos that are actually palatable to watch instead of going through all the mind-numbing, boring financial stuff that some people just aren't interested in. So it's all good. All right, tomorrow we have, of course, the Fed meeting. That'll be the big focus there. Remember, don't expect fireworks on the announcement. Expect to see the language, and everybody focus on the language for what they're going to do in March. And now you know they're going to thread the needle. I'll make a friendly wager with you that nothing else happens besides them trying to make you believe there could be a cut, but don't want to guarantee it. They want to leave their options open. So we'll see. You've also got earnings from Boeing. Yay, that'll be fun. MasterCard, Old Dominion. So that'll be one that we could use to see transports, right? Oh, are we slowing down? Are they starting to see the same thing as UPS? So we'll get that. You got Qualcomm reporting after hours. Actually, C.H. Robinson's reporting. So you got two transports that you could take a look at there. Teva Pharmaceuticals and Meritage Homes. So we could see if they believe demand is going to be strong as well, and inventory being a little bit lower. I will take your questions if I can figure out how to do it. And then we'll get, yeah, there we go. I got it all figured out. Yeah, Super Bowl bets. What do you got? Do you have any Super Bowl bets?
Yeah. Usually, big Tails fan on the coin toss.
Oh, prop bet.
The over on the national anthem's one of my favorites. Yeah, just normal stuff like that. Yeah.
Do we know who's singing the national anthem?
I think it's Reba McEntire.
Over.
Yeah. Yeah. I think, and then Post Malone's doing God Bless America over on that as well. But
Okay. All right. I need the 49ers to win. So.
Yeah. Well, yeah, that too.
I don't want to tell people about my bet because, like, I was telling the guy that I met in Vegas about the bet that I made, and he's like, "You shouldn't show that to people."
Yeah, that's true.
He's like, "You should just tuck that away,"
Yeah.
So I hid it in my house.
You should.
And then I set an alert to go off every 6 weeks to tell me where I hid it.
Oh, good.
Because I'll forget.
Yeah.
What I mean?
No, we can't lose that.
Yeah, I know. That's going to be a big one. So, we'll start by just saying a 49ers win. That'd be great. Oh, shoot. We got some Chiefs fans in the house there. All right. Wait, I wish you well, but I need the Niners to win. The surprise for UPS was that it was in the holiday quarter. Well, you can add to that. I'm just saying, if we have one miss, like if they say revenue per package was down, this is not the first time this has happened. Well, then we can look to other things and see what's the margin? What happened? Did they have to be more competitive? Were costs higher? Was fuel higher, right? We know that's not the case in this go around. At least it wasn't through the holidays. So yes, you can use that. But when there's a trend, they're losing revenue per package quarter after quarter. That's where people start to get a little bit nervous, and probably why you saw the big move down today. Also, a move, UPS to lose more than 8% in a day happens not even once a year since they became public companies. So this is not common. It has happened a lot more in the past couple years, but just, I was having fun with the research site, just looking up stuff. Josh says, if I take $10,000 from my IRA to purchase a home, but you don't end up needing it, how long do I have to return it? Isn't it considered a contribution? So you can technically borrow from your IRA any amount, as long as you return it within 60 days. And it's the date of the check to the date of the check, right? That's how you can tell. So, and you really should send a check in if you're going to do that. So you've got 60 days basically to say, my mistake, I put one extra zero in there, or I didn't mean to do this, I'd like to give it back. And it will not count as a contribution. Once you get past that time period, though, It does count as a contribution. You would not be able to put the full 10,000 back. So that's why I say, like, you can borrow, right? Because if it's a 60-day thing, you know, we can make it work. But other than that, the IRS not gonna like it. All right. What do we got here? You like your OGN now? Grabbed a little bit again today. You know, it's not for me, but you know, I hope it keeps going for you. That's a massive move. Don't be fooled by, look, don't be fooled by looking at this and saying, look, oh, it only bounced halfway, or not even halfway. That is a massive move from 10 to 16. It's a lot of effort being taken on and a lot of people slowly not participating. Less and less volume on a stock that's going up. Why is it still going up? It's a little bit of a hot air, last second kind of a purchase thing. I could be horribly wrong, but I'm just, those kind of things, I'm like, there's too many questions. It's a little bit difficult for me to wrap my head around that. Daniel says, should you pay off high interest debt by pulling out of your Roth IRA? That is way too general of a question. I have said yes to clients. Very, very, very recently actually was kind of demanding that they do that, but they had plenty of money, right? So their Roth bucket, so to speak, that portion of the money would be more than fine for them to take it out. They'd actually end up with more dollars by doing that. If you're 61 years old and you're trying to retire next year and stuff, then we got to weigh the growth that you miss out on versus the growth you could have and stuff. So it's a tough one for me to just generally answer for you. Keith, 37,000 feet and 737 max. Hey, I was just on one of those. And where are you going, Vegas? I was 37,000 feet too. Exit row, by the way. No, it was the max 8 on the way out there and the 700 on the way back. I made sure to check because, you know, you can never be too careful, Keith. You know, you just gotta be careful. What? Oh, the dog's slurping over there? That's all good. Hey, we'll wrap it up there. I'm going to get back to work, do what I got to do. Hope you enjoyed the show here today. We'll be back tomorrow. Lots to talk about tomorrow with earnings and, of course, the Fed meeting. We'll see what they say. We'll cover it all and enjoy the rest of your day. Adios. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.